Okay, guys, welcome back to episode 23. So, I'm just going to touch on the stock market because I really think it does provide a lot of profitable opportunities to trade as well. As I know, a lot of you can trade them through, like, say, whoever your broker is at IC Markets or IG Index. You can obviously trade the stock market in the terms of the symbols I'm showing here. So, like the Dow Jones, the US 30, which would be the Wall Street. So, how I use the stock market to gauge the environment. So when we're looking at the stock market, this is basically the indication of what kind of risk, again, coming back to that risk on risk off term, of what kind of risk environment we're in. So you can see when we look back throughout the long term, stock market's really done nothing but go up. So since far this goes back in 1915, stock market's done nothing but go up year on year, as this is basically the most common form of investment in terms of stocks and bonds, etc. So with the stock market breaking all-time highs and then continuing week after week to make new highs, as you can see, this means that we are in a risk on environment. So it means stocks are viewed as more of a risky investment vehicle compared to the other things that you can have, which will obviously be covered in a later episode. So you can see now we had this high, price came back down, retested it, and we're moving higher. So this lets me know that stocks, if the stocks continue to move higher, we're in a risk on environment. So investors are investing into stocks because they're high yielding. So that means overall, investors want to invest in high yielding assets. So this has a knock-on effect which comes back down to currency. Again, with the Aussie and New Zealand, the yen and the Swiss franc. So what you can actually trade, well, what I've traded a few times is obviously Wall Street. More often than not, when the stock market does have sell-offs, they are viewed as opportunities to buy because essentially everyone just wants the stock market to go higher. That's basically the overall prevailing mindset of the stock market. Any kind of crash you have, you're still wanting it to go higher because you're going to get more value for your money, just like any investment vehicle. As you can see, our edge is still present in the stock market. So if you can apply everything that you've learned during this video series to the stock market, it's just, of course, the stock market is a more volatile asset class compared to currencies in terms of stop loss. So for example, if we enter the Wall Street at our 66, the size of our stop loss would need to be nearly 800 pips. But of course, you will be targeting nearly 3,000, 4,000 pips. But you can see an 800 pip stop loss, not many accounts could hold that. So you'd be more inclined to taking more risk or not having your stop loss in the actual place of invalidation. The S&P 500, again, that's just relatively the Dow Jones, Wall Street, S&P 500, and Nasdaq. They're all dollar stock markets. Japan 225 for me has a strong correlation with the yen, so with all the yen pairs. So when this is pushing up, we tend to see US dollar yen going up. So we tend to see a buy-in of the riskier assets and a selling of the yen. When this is going down, this tends to, you see US dollar yen going down. So for me, it has a positive correlation. When one's going up, the other's following. When one's going down, the other's following. So right now, for me, it does look like we may see a decline on the stock market because we've come back up into these highs here. We've got some slight corrective structure coming in here. So if we break out of here, I do think we're going to see further downside on UJ, which now, what would that come into? So if the stocks are being sold off, which is a risky environment, that means gold will continue to push higher because it's a safe environment. So it's a knock-on effect. So if you can just assess the risky assets and what their potentially next move is, then you can understand that potentially where money is going to move. So if we have this pullback on Japan 225, which I do think potentially we're going to have, I do think we're going to see this pullback to 22.092, then I expect further downside on UJ and further upside on gold. The DAX or the DE30, this is correlated to more the euro. So this is the German stock market. So you can also see as well here, starting to see price potentially looking like it wants to have a pullback. So they all really do follow the US economy, but they all have their own reasons as to why they're moving in the way that, or the manner that they're moving. But naturally, coming up to all-time highs again on the DAX, you're naturally going to have people getting wary whether or not we're going to break through, and this in turn leads to that pullback. But for me, I do think we're going to see a pullback on the DAX, and then we're going to see further upside. So I still think we're going to be in a risk on environment. UK 100, so this is the FTSE, or also known as FTSE 100, so this is for England. So you can see right now FTSE 100 strengthening as well. All-time high on the FTSE is around 7904. So again, everything that we've covered can be applied to these markets as well, in the way of key levels. Everything can be applied to the stocks also. So with the stock market, again, I use it as the risk on, risk off. So you can see when the stock market sells off, you're going to tend to notice that, let's go back again, you're going to tend to notice stock market selling off, and so is the riskier assets, they'll be selling off. So you see in regards to UJ selling off, because UJ is viewed risky and yen is viewed safe. So when you see the stock market starting to sell off, it's just an indication that we're now moving from risk on potentially to risk off, which is where you see the money move, because trading and making money from trading is all about understanding where the money is going to move and why. And once you understand those key components, then you can understand where's the best place to place your money, which is essentially where you're placing a trade. So if you're going to say we're going to go on, we're going to continue to have UJ further down, excuse me, so we may see UJ pull back down to say 10500, then you're going to see that drop as well on the Japan 225 on the stock market, because we're selling a riskier asset in regards to a safe haven asset. So it's just the overall attitude of the market, the overall risk appetite of the market, and that essentially has a knock-on effect to everything. So you see the dollar starts to sell off. The dollar is viewed as, the dollar's got a mixed opinion. The dollar is more based off what other things are doing. Because in regards to say the yen and Swiss franc, the dollar is viewed as risky. But in regards to the euro and the pound and Aussie and yeah, the euro and the pound, dollar is viewed as more safe. So it's just about what currency you're comparing the dollar to. But dollar has more of a kind of middle view. So you have to look for more detailed clues to understand where money is going to move and why. So that's why I have things shaped up like this. In the next episode, we're going to go over the risk on, risk off indicator. So this is where it's going to go into a little bit more detail, and this is where you're going to understand the previous things discussed. So stay tuned for the next episode.